Looking for the best opportunities in Perth property? Get the local area expertise you need from Momentum Wealth, WA's trusted property investment consultants. Market insights, advice and representation from award-winning buyers agents and REWA Hall of Fame inductees. Visit Momentum Wealth's website at momentumwealth.com.au to organise your obligation-free consultation today.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Hi, good everyone. How you going? Welcome. Hope you're enjoying sort of summer. I'm sort of get stuck in it. It's just recording this just before the Australia Day long weekend. I'm going to take a long weekend. I'm going to take the Monday off and spend 4 days, hopefully on the beach somewhere. But anyway, I digress. But I will be thinking about property while I do that. I'm actually going to use a bit of a trip with the family to a location to have a look at some properties as well. So it's always good to mix business with pleasure. That's what we do here at Smart Property Investment, sharing those journeys, sharing those stories with property investors right across the nation. The investor stories is the bit that I get most excited about, having chats with those people who are out there doing it. And some of them are just kicking off. Some of them are been at it for quite some time and have quite large portfolios. Our guest today, Michael Thomas, is reasonably new to property investing from what I understand. That's about the extent of the brief I've got. And that's the way I like it, because it means that I can be inquisitive and see what's going on and see how we can steer this conversation. Michael, how you going?
I'm
Welcome.
good. How are you?
Yeah, good, mate. Where are you recording from? We're on Zoom, so where's
Petersham.
home?
I've just moved to Petersham.
Okay, Petersham being near Stanmore.
Yes.
Yeah, okay.
Prior
That's cool.
to that, most of my life, though, I've lived in Thelmere, which is near Picton.
Okay, where Thelmere?
Thelmere near Picton, kind
Okay.
of semi-famous for its Thomas the Tank Engine train station.
Is there a Thomas the Tank Engine train station there? Is it like
There
a real
is.
one or a fake one?
A fake one, I would think.
Okay.
Yeah. I don't actually know. I've never been. But yeah, that's
Okay.
where I've lived most of my life.
Okay, so Picton.
Yes.
Picton. Okay,
About
near Camden.
an hour 15 or so from the city.
Yeah, that's right.
Yes,
okay.
correct. Yeah.
Yeah, okay. Out near Badgerys Creek, I guess. That's where the big new airport precinct out that way. And for those people who are not in Sydney, Petersham is probably about 7-ish kilometres from the CBD in the sort of inner west area. So sort of older, sort of terrace type housing, that sort of stuff, if you get the vibe. So you're a property investor, Michael.
You could call me that, I guess. I don't think of it necessarily in that light. I'm only new to it, so that could be the reason why I don't consider myself an investor yet, but I am invested, I guess, so that counts.
Well, you're investing in property, investing in education. So how did you find the Smart Property Investment podcast originally? How did you just stumble across it somewhere?
So before getting invested in property, I decided that it would make sense to indulge for at least 6 months. It's obviously a pricey investment. You're talking hundreds of thousands of dollars. So in doing so, I looked up property podcasts that I could listen to over the course of 6 months to familiarise myself with what I'd be getting involved with. And upon doing a Google search, I came across this one, a couple others. And that allowed me to be a little bit more comfortable before making my first purchase.
And I guess you like what we do on the Smart Property Investment Show?
Yeah, absolutely.
Any constructive criticism? I'm always trying to improve it. So what would you like to see more of?
My personal preference would be listening to experts, just because I like to listen to people that know what they're doing so that I can hopefully try and replicate that.
Yeah.
I think investor stories are also encouraging as well. It lets you realize that you don't need to be Einstein or a genius at any level to do well in property. So what you do, I think, is brilliant. It's a nice balance of both.
Yeah, no, thank you. And from what I understand through listening to this podcast, you decided to go down a pathway of, rather than doing it yourself, to bring in a buyer's agent to help you out with that. Tell us about that decision, because it's something that a lot of people balance when they are going into investing, or if they are already investing, how they can sort of project their portfolio forward. It costs money to use a buyer's agent. If you're using a buyer's agent that doesn't charge you, it means they're probably getting a commission somewhere else, so they're not really a buyer's agent. So why did you choose a buyer's agent rather than doing it alone?
So as everyone's aware, buying a house is usually a multi-$100,000 purchase. And being somewhat of an expert in my industry, I figured if I was going to recommend someone how to make a purchase for a car, I'll probably encourage them to seek advice from someone that knows what they're doing. And so I didn't think that it would be reasonable to not apply that same perspective to another industry. So multi-$100,000 purchase, I want to be under the instruction of someone that knows what they're doing. I don't want to blindly go into it and make a mistake that I'll live to regret 10, 20 years down the track.
Yeah, and that's good. Okay, so your day job, you're working in automotive industry, do you?
Yeah, correct. A value buyer, basically kind of like a manager for a national buying program across Australia.
Okay, so you look at a car and work out how much it's worth.
Yeah, correct. Yes.
Like secondhand stuff? Or
Yeah,
new?
secondhand.
Okay, so like when people trade in and stuff, and whether or not you want to pick up the asset to resell, that sort of stuff there.
Yeah, it's a combination of private purchases / valuing for brokerage, other dealerships. Virtually any avenue that will provide a car, I'm able to value for that provider.
How much is is it the red book? It used to be where you used to go to work out how much your car is worth?
Yeah, garbage. Look, realistically, not too dissimilar to real estate. The only way of knowing the value is to know what something sold for recently. So I'm specifically attached to an auction house. And what that does is it gives you information on a weekly basis of what things are selling for. There's no point looking at something that someone's told you 6 months prior because it's not a good indication of where the market sits at the current moment.
Okay, so I have a 1994 Toyota 4Runner, original condition.
Yeah, how many hundreds do you want for it?
Mate, it's got less than 200,000 kilometres on it. It's never been touched. It's still like it's come out of the shop, except that the paintwork is completely cactus. What do you reckon? Hundreds rather than thousands?
Hundreds rather than thousands, yes.
It's funny, though. I think it's the most valuable car in Australia. So, I probably spend more on it yearly than what it's probably worth just the... I don't know, it's got rust and stuff in these days. But anyway, like as an asset, it's fundamentally flawed, right? You wouldn't buy it. But to your point around the value of something, whether it's cars or whether it's property, it's about, markets dictate and determine the value of what something is at any given time. And there's a lot of reasons why car values go up and down, and most car values go down, but why house values go up and down in lockstep with environmental factors. So tell me about the car industry now. I've just sort of bought a new car and waiting for it to be delivered. Is it a hot market for cars at the moment? Yeah.
And why is
that? Is it stock, right?
Yeah, it's the same as real estate. So combination of there not being much stock, there's plenty of delays on new cars, which puts more pressure on used cars. And then you've also got government incentives that are encouraging people to spend. So all of those things creating a bit of too much of a focus on the used car market. And a lot of cars are worth more now than what they were 3 years ago, which is unprecedented. No, I've only been in the industry for 3 years, but in talking to people that have been there for 30, 40, it's never been seen before.
Wow. And because they're just holding their value because there isn't much around.
Yeah.
That's fundamentally it.
Yeah, it's supply, demand, same as any other market. If demand is more than supply, prices go up.
And do you sort of frame a lot the dynamics of real estate and investing in real estate with what you're seeing in the transactions of motor cars? It's very similar, isn't it?
It is. It allows me to be a little bit more comfortable with the dynamics of any market because I'm active in a market on a daily basis. So it's probably easier for me to understand more than it might be for someone else that's not familiar with trading. But still, there are emotional reactions that you'll have. Even right now, I'm always searching for a bargain. So in my most recent purchase, it did take some time for me to reconcile that I do have to pay market price or even possibly a little bit above because that's what the market demands right now.
And we'll have a chat about some of these assets that you have acquired. Just how did you end up doing what you do? Like, did you grow up loving cars and said one day I want to be a valuer of cars? Like, what's the backstory?
I hated cars. I was driving a 2007 Suzuki Swift with no brake pads in a manual, done 250,000 Ks, and I think it had hail as well. I actually drove it to my place of employment and left it there. It's still sitting there to this day. It's been there for 3 years and hasn't moved. Basically, how I got into it was I was unemployed. I was pretty much kicking the can down the road, just trying to waste time. I was studying bits and pieces just for something to do. And I had a friend that offered me a job in the motor industry. And I didn't care for cars at all. I thought it was A to B and that's it. But at the same time, I thought I can always just say yes and then quit. So that's what I did. I said yes. And eventually that company got taken over by a larger company 2 months down the track. And as a consequence of having a really talented friend in the industry, I was given an opportunity which I took with both hands and made something out of. And
you've been in that game now for 3 years?
Yeah, 3 years now, yes.
And do you enjoy it? Like, you get a kick out of work?
Yeah, so interestingly enough, what I've found is it's not necessarily the industry you're in, but the position and what it involves and how that blends with your personality. So I'm a little bit competitive by nature. And so even though I didn't care for cars, I was given a chance to work a position that allowed for that to be expressed, that competitive nature to be expressed. It's a results-based game. So it's how much money can you make? And there's a score that's tracked. So it gives me something that I can see a number result and then work to improve on that number.
Yeah. So I guess so every single day there's a scorecard of success, right?
Not every day. It's more on a weekly basis when the cars are sold, because predominantly they're either wholesaled or auctioned, with the majority of them being through the auction. So every Tuesday, Wednesday, we get a results email sent out with how we've gone for those days.
Yeah, that's cool. I like car auctions. Michael, we're going to have a quick break. When we come back, let's pick up this chat and get some philosophy around investing back in a moment.
Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show with property investor Michael Thomas. Professionally works in the automotive industry, looking to create wealth through property. Now, Michael, so you've been in this game for 3 years now, obviously earning an income, and I'm happy for you to share how much you earn or not share it. I don't really mind, but to give some context to it all, tell us about your philosophy to property investment. Why are you going down this pathway?
So to touch on the first part, I don't even know how much I earned for each year actually, but roughly I've tripled each year. So I think the first year I might have made like 170 and then 250, and then this year it's about triple that and still counting because the financial year hasn't finished. So it's an extremely high income and it likely won't last forever. At least that's how I approach it. And the reason why I approach it that way is I don't want to assume that I'll be on good money for the rest of my life. And so while I've got the chance, I want to make use of that income. And I thought the best way to make use of that was through investing.
That's pretty big salary. Like, that's big bananas. Are you sort of channeling most of the funds that you're generating through work into property, or you live in a lavish lifestyle side by side? How are you framing that?
No, I'm extremely frugal. I don't track my spending. Now, that's probably a consequence of laziness, but also I don't know that it's as necessary as it would be for someone that does live lavishly. I wouldn't think that I'd spend any more than $100, $150 a week outside of necessities being like rent. I'm also in a fortunate position where a lot of costs are covered, like phone, fuel, car, which are big ones for a lot of people. So it really just comes down to rent and food. And then I allow $100, $150 for dinner on a weekly basis with my partner.
Wow. Okay. So you really are looking to make hay while the sun is shining. And so, but based on the fact that your salary is increasing at such a trajectory, a lot of it must be commission-based, success-based. Is that how it works?
Yeah, correct. Yes.
Yeah. How's that commission structure work? Like, do you get a percentage on the positive sale of something over a particular amount? Like, how do they incentivize you?
Yeah, it's a percentage of net profit. So I work 7 days a week. There's not a day that I've taken off since we returned from COVID. That's not enforced by the people that I work for. It's just I like doing what I'm doing. I'm competitive by nature, so I'm always trying to push myself. But it's unfortunate that it is the type of job where the more you put in, the more you get out. I'm sure it'd be a different story if I was working a trade and I was on a flat rate, and working overtime only gets me a guaranteed amount versus if I work Saturdays and Sundays and I find 3 extremely cheap cars, the rewards for that can be quite large.
So your job then is to try and secure good assets, good car assets under market value and to sell them at market value, and that gap between is the profit and you get a percentage of that.
Yes, correct. Yeah.
Okay. So this is what most property investors try to do. A lot of people I speak to, investors, end up becoming buyer's agents, mate. Is that going to be a pathway for you? You could probably use a lot of those similar skills in automotive into property. Is that on the pathway?
I've definitely considered it. At the moment, it'd for sure be premature. I'm not well versed enough in property to even consider something like that right now. But it's given that I've always hated cars and I've ended up in the position that I'm in, it's difficult for me to make plans for the future, because if you asked me 5 years ago or even 4 years ago that I'd be doing what I'm doing now, I'd laugh.
Do you go scratch yourself sometimes and you see your paychecks coming in going, I never thought this would be like this?
Yeah, but I don't really look at it, to be honest.
Yeah.
I don't look at how much I earn. I'm still the same person that was unemployed at 23. It's easy. Like, I know people that are multimillionaires that are unhappy. I know people that don't have much that are happy. And that's the real currency that I think people should base their self-esteem on.
Yeah, and that sort of philosophy towards, or your attitude towards wealth, is a very personal thing. A lot of people quantify wealth as a mechanism of the dollars in their bank account or the assets that they have, whereas other people's concept of wealth is how much time they have to spend with family. And that's a very individual and personal thing. And people sort of ebb and flow through life of where that sort of the mechanics of their attitude towards wealth. And wealth, good wealth, whatever that looks for people, is typically transitions into happiness and mental health and all that sort of stuff. How your philosophy towards this has been pretty consistent, despite the fact that you got a few more bucks in your bank account now, like seeking happiness or seeking, contentment?
Well, no, I struggled with depression for all of my life up until, I would say, about 22. And so I think that's given me a good reference point that's helped to keep me stable or humble. Because I've got I've created this hell that I'm running away from, in a sense, and I'm very conscious of behaving in a way that won't maintain what I have right now. So I ensure that I do all the things that have helped me get here. So wake up at the same time, eat well, sleep well, exercise. Those things are the non-negotiables, and everything outside of that is what I'm spent work and everything else with.
So you've had your own challenges with mental health, but you've now better equipped with tools to be able to, keep pushing forward despite any of these sort of challenges that you do have. It's important, and like routine. I think the best people I know that act and operate their best have a really good routine, and that can be personalized, but it'll also be professionally as well. And some of that discipline also can really come down into how you invest in property. Just doing the basics really well should secure you a better outcome, is my view.
Definitely. So I was fortunate that I've started exercise at a young age. And what I've realized is that I've applied a lot of those principles from exercise to business. So be on time, be consistent, do your best. And if you can do those things and you're efficient with what you're doing, you'll get results. And it might not be, like for me, it happened very quickly. I'm extremely fortunate, but I know that for anyone, as long as you try your best and you're consistent, eventually an opportunity will come. And as long as you say yes, things will improve. Yeah.
And I've got in the back of my head what I think you might do for exercise, but I'm going to ask you the question. What's your thing?
So it's resistance training. Like you could call it bodybuilding / powerlifting. Okay. But I've also just started MMA. So I'm fortunate to be in a position where I've now been able to hire people. I used to do, there was points where I was doing 24-hour shifts. I was up at 4 a.m. flying down to Melbourne, and then buying as many cars as I could and then driving back. As I've progressed, I've been able to employ more people to do things for me, and I just stick to more the valuing component of the work. That's allowed me to have some time to do martial arts, which I'm only 2 months into. So resistance training and martial arts. Yeah.
Oh, well, that's, any sort of pepped up energy, you can exert it pretty well through MMA, mate. Yeah, I bet you're fit as a fiddle, but yeah. So what's the future hold? And we'll get into the assets that you've acquired in a moment, but like the why of property investing. So you're doing it now because you have the capacity to do it, but what are you building towards? What do you hope when you get towards the end of whatever your property investment journey looks like? What are you going to do? Is it to retire on a beach somewhere?
I don't know. It's hard for me to think that I'd retire just with how much I work at the moment. The goal was always FU money or financial freedom, however you want to phrase it. If someone tells me to do something, I don't want to do it, I don't. And I'm pretty much at that point now. I'm not loaded by any means, but I can take a pay cut and I'll still be okay long term. The goal, though, for me specifically was I didn't want finances to compromise my marriage when I get married, or my children's health when I have children. So that was the main goal. And I knew I'd do it either through stocks or through property. And for me, I can't wrap my head around stocks. Just purchasing something that's just numbers on a screen didn't sit well with me, although I know it can be useful. And so that's why I leaned more towards property as a vehicle for investing.
Okay. Well, let's have a chat about your portfolio or your property strategy. We'll just go to a break before I'm back in a moment.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show with investor Michael Thomas, chatting through his view of the world and how he's using property as a mechanism for wealth creation and where that strategy lies. What's your overall approach, your overall attitude towards investing in property, Michael? Is it, what sort of assets are you looking for? Are you looking to build a big portfolio in terms of numbers of properties or fewer properties at a higher value? Tell us about it.
So under Arjun's guidance or instruction, what he's kind of proposed is build up a few houses between the $400,000 to $700,000 mark. And then from that, we'll move more towards cash flow based properties. And then I think the last stage is to kind of obviously pay off that debt so that I can achieve a passive income. Now, I can't remember the specifics of time frame, but I guess the goal would be, at least for me, to build up enough passive income so that I can do what I want to do ultimately, which is hopefully help people with mental illness.
That's cool. And how do you think you do that? You sort of invest your time in supporting other people sort of going through that sort of journey themselves?
I think with anything, you should try to stick to what you know best. So I'd probably pay most attention to young males. I think there's a lot of young males out there that don't really have direction, addicted to video games and not really sure what they should do. And so that's where I'd like to spend a lot of my attention. I don't know for sure how I would do it. If it'd be a blend of like coaching or just social work, I don't really mind. What's important to me is scope. So I'd like to do something where there's a lot of scope. I've thought about doing teaching in the past, but the scope's too small to satisfy me. So I don't know exactly how I'd do it, but being only 27 years old, I do have some time to think about it.
Yeah, don't be in a huge rush, mate.
No.
You don't want to grow up too quickly. It's Peter Pan syndrome and all that sort of stuff. But I think it's absolutely commendable. A lot of people invest in property for the purpose of, we were chatting about beforehand, the purpose of wealth creation. But, if you want to transition that wealth creation into a mechanism for supporting others, that's a personal thing for you, but I think it's a great sort of initiative. So, but you've got to get there, right? So that means buying the right properties at the right time. They go up in value.
Yeah.
You can pay down the debt. So at the end of it, you can go, oh, hang on a second, I've got more time, or I've got more financial freedom, or I don't have to work anymore, but I've still got money coming in. That gives me time to do what I want to do. You doing what you want to do is supporting young males, and that's cool. Tell us about the properties that you've bought so far. So you're down this pathway of buying a number of properties at 400 to 700 bracket, which outside of the major capital cities, Sydney and Melbourne, is a pretty big scope, right? There's a lot of properties in a lot of locations that fit within this. You speak about Arjun. So you're chatting there about Arjun Paliwal, who he's been on the podcast recently. He's also launched his own new podcast on the Smart Property Investment Podcast Network called The Property Nerds, and he's a nerd. And I say that in all fondness with Arjun, but it's a pretty straightforward strategy. It's a nice, safe strategy, and It's an appropriate strategy, I think, for a lot of people starting out. So he's helping you secure properties. Tell us about the first purchase. Where was it? What was it? How much was it?
So just as a bit of context, I'm conservative by nature. So even though I might have the financial ability to buy more expensive properties, it's not the way I've been inclined to approach things. The first property was bought without Arjun. It was with another buyer's agent, and that was in Logan Home in Brisbane. Now, the reason for that, as I just mentioned, was because it was a relatively cheap property. I picked it up for 306 or something thereabouts, and it was quite substantially cash flow positive. So I saw that as a way of dipping my toes in the water without having to worry at night whether or not, if someone leaves, if I'd be able to make the repayments. Moving on to the second property, the reason why I went to Arjun was this first guy specializes in that area specifically and almost exclusively. And so I thought, moving forward, I do want to buy properties around the country. And so it would make the most sense to work with someone that can allow me to do that. After listening to Arjun, I picked him because he sounded like a nerd. I wanted to pick someone that is passionate and intelligent with what it is that they do, an expert, in other words. And so I called him, we had a chat. I explained my preferences as far as how I would like to buy and where I would like to buy. And then he's since then found my second property in Wynnum West in Brisbane also. And the next one, I believe, will be looking towards Adelaide.
Okay. So you're building out a diversified portfolio from the get-go. How are you going with finance? I imagine lenders are quite happy to lend you money.
Yeah, finance isn't an issue. It hasn't really been a consideration at the moment, which again, extremely, extremely fortunate for that to not be a concern. But I know that for most investors, especially when you're starting, it is something that you need to be very mindful of.
Yeah. And are you fixing your interest rates, or are you doing variable interest rates? Tell us a little bit about mortgages.
So the first one, yeah, they're both variable. I was considering doing fixed right now because CBA is offering a pretty attractive rate. But just as a matter of convenience, I wanted to get it done quickly. It was an unconditional purchase. So for the sake of a few points, I went with the quickest provider. Once everything's settled, I might ask my broker to move me around. But really all I've done is I've just gone with the person, with the lender that provides the most attractive rate, while also allowing a good turnaround time.
And do you have a number? And by that I mean, most people, when they start acquiring property, it's for a reason to generate a long-term cash flow over time at a point in time when there is, inverted commas, a retirement. Do you have a sort of a total asset base that you want to build in terms of a dollar value, or are you framing that more on you want a particular number of properties, or what's the goal there?
The goal, like the number that everyone seems to throw around is like 100,000 a year in passive income. But the one thing that I think you need to be mindful of is how inflation will affect that. $100,000 20 years ago is very different to what it is now. And so when we're looking at a long-term investment, I don't know what that number would be because I don't know how that will translate to 2030, 2040. If you told me that I needed to pick one, I would imagine it'd be somewhere around the 150 mark. And that's allowing for inflation. I also don't know how many kids I'm going to have. I don't know where I'm going to be living. Like, there's so many variables that make it hard to decide. But if I was to give a number, it'd be between 100 and 150. Yeah.
And fortunately for you, you've got time on your side. You're only 27 years old. So if you think about, if you're going to work until you're 60, that's 30 years, right? Which sounds like a long time, but you should see at least 2, 3, potentially 4 specific cycles or market cycles through that period of time, feasts and famines, GFC, coronavirus, whatever it is that determines or dictates markets. But this is sort of number banded around that probably doubles every sort of 7 to 12 years or whatever it is, right? So even on that basis, but that's pretty loose, and don't get caught up in that, anyone. But, that means you should see 3 or 4 of them over your working life. And that's the compounding impact of capital growth in property, which makes it such an exciting asset.
Right. And that leverage is the other thing that I don't think enough people consider, especially when you look at debates between equities like stocks versus property. Leverage is one of the biggest things, where you only have to invest a certain portion of an asset to get that asset, versus for the most part, most people when investing in stocks, they're usually buying only the amount that they're putting down. So it's a hugely important thing for people to consider if they're questioning whether or not they should buy property. As for the amount of numbers, I kind of missed that question before for property. I would think around 10 to 20 would be the goal, but I'm also mindful of not creating another job in itself with just managing those properties. So it could be something that I need to speak to Arjun or other people that are experienced in property to get an indication of what that looks like as far as how much time is involved to look after these things.
Yeah, a lot of people think property is a passive asset, as in you buy it, you just wait for it to go up in value, and that's not the case. You've got to be active and hands-on, and I can speak from experience with a portfolio which isn't small. It's an administrative headache, right? It's a headache, and I often don't do it very well, and it's just sort of, just poor admin or poor management. But as the portfolio gets bigger, it does turn into a bigger headache. And if I had my time again, I might not have bought so many properties or bought slightly different properties. But, I'm still reasonably early on in my my investing sort of cycle, I've probably still got another good 20 years of property investing in me. So, where my portfolio is now, I've got time to improve it. That might be selling off some of the lower end assets to secure higher end assets. But, that's the journey of property. But as long as you embark with a pretty clear strategy, and my strategy today is not that different from what it was when I started in property, around the purpose of capital growth, through leveraged residential property hits. It's exactly the same. It's just slightly different with the type of stuff I'm buying now. So, mate, you'll enjoy the pathway. What you're doing today will be very different to what you're doing tomorrow. But it sounds like you got your head screwed on, and even in your day job, you're learning a lot around and a lot of lessons that apply into really successful property investing.
Yeah, the other thing that I've found to be useful when people talk about investing, I think it's important to invest primarily in yourself. So always look to be learning. Always look to optimize how you feel. When you feel better, you're usually going to be more likely to make decisions that are better for you. I would think that if someone's quite pessimistic, low self-esteem, it's going to be hard for them to take the plunge in purchasing a property. So being in a positive mind frame, I think, is almost pivotal to be a successful investor.
I completely agree with you. And a positive attitude enhances better decision making. Exactly. Supports wider happiness, and it's challenging for some people, but to the point you made earlier on, if you get the basics right, you're going to set yourself to be in a much better position, both as a property investor, but also in your own sort of personal head. And those basics are sleep good. Like, I prioritize sleep over most things. If I got a choice between A, B, C, and D being sleep, I'll go, I want my sleep. I don't miss sleep. If I sleep, I perform a lot better, looking after yourself, eating well, exercising, all that stuff. The basics can really help change and shape the way in which you're acting and be a successful property investor. But Michael, thanks for your time, mate. Don't be a stranger. Let us know how you get on. So there's another purchase underway right now, or when's the next purchase?
Well, everything's just been accepted. It's just a matter of formalities now. I was lucky enough to it was a divorcee sale. So there's been a rent back. I don't know if it's a clause, but a rent back agreement. And so one of the partners will be staying in the property for the next 12 months, which makes the transition a lot easier. I don't have to get property managers and everything else involved. But as far as I'm aware, everything's kind of locked in and good to go.
Excellent. That sounds like a good buy. That's Michael Thomas, property investor. Remember to check out Smart Property Investment, and we'll follow Michael's journey as well if he's happy to share it on his pathway investing in property. Thanks for your time, Michael. I do appreciate, mate, and sharing some of that stuff.
Thank you very much. It's been a pleasure.
Nice one. So that's Smart Property HQ is where we are on social media, if that's how you like to keep connected with what's going on, or you can subscribe to our daily morning newsletter at smartpropertyinvestment.com.au. Thanks so much, everyone tuning in. I hope you like what we're doing. Quick favour for me, and it's for the team here. They really get a kick out of those reviews coming via wherever you listen to this right now. Most of you guys and girls on iTunes. So if you can just leave us a quick review, that's great. Press the subscribe button, tell your friends. And I hope you've stumbled across this podcast like Michael did. And, it's helping you embark on a more productive and successful property investment journey. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.